Up first for the day, we got the S&P TSX Composite Index. It is down 16 basis points for the day. Over the week, it's been down 0.5%. Over the month, it's been up 0.25%. And for the year, it's been up a staggering 15%. But looking at the year past chart, you can actually see that it's only been up about 0.25% over a year mark. Moving on to the S&P 500. Over the past day, it was down 26 basis points, and on the week, it's been up 37 basis points. For the past month, it's been up 1.5%, and the year to date has been a staggering 20%. But again, looking at the past total year, it's only been up 6%, but it still is better than the TSX. The Dow was also down on the day, falling 9 basis points. On the week, it has also been down 6 basis points, but on the month, it's been up 1.6%. Year to date has also been very high with 16.5% gain. But again, looking at a total year mark, it's only been up 6.8%. Looking at the NASDAQ, it has been down 24 basis points for the day, but over the week, it's actually up 33 basis points. For the month, it's gone up 2%, and on the year, it has the highest gains of 24%. But looking over the past year, it's actually lower than the S&P 500 and the Dow with a gain of 5.9%. Looking at the FTSE 100, for the day, it's been down 62 basis points, but for the week, it's actually up 1.3%, and on the month, it's also up 1.6%. Looking at the year to date, though, it's been up 13%, but again, by looking at the total 1 year return, it's actually been down 0.7%. The Nikkei had a rough day, falling 86 basis points. That means on the week, they have fallen 1.1%, and on the month, fallen 0.27%. But on the year to date, they have risen 10%. But again, I must stress, looking at the total 1 year return is actually down 4.5%. Looking at crude, it's actually up 1% a day with a pretty high price gain this week of 4%, but on the month it's down 1.5%. And on the year it's risen 20%, but over the past 1 year it's actually been down 7.5%. Up first, we have the US and China trade talks ending. So President Donald Trump was in Beijing for a few days talking with China over the trade relations between the US and China, hoping to make some progress. Little has come with this meeting, as expected, with both sides staying firm on what they demand. So the tariffs on Chinese imports will continue, as well as the response taxes from Beijing on US products. Beijing was hoping that the tariffs would be reduced, but Trump is holding strong on his tariffs. What also came out of this, though, is Trump is saying that they're delaying the trade deal in hopes that a Democrat will win in 2020. This could be risky because he has a chance to win, as well as that will be a year and a half forward, and that could have a pretty bad impact on the Chinese economy going forward. The big news everyone's been waiting for is the highly anticipated Federal Reserve rate decision. So that's happening this afternoon, and is expected that they will lower interest rates 0.25%, and some even expect that they'll lower them 0.5% and actually have that probability higher than them leaving rates the way they are. I think that is a little unlikely. I expect that they would more likely leave rates at the same because they have been reluctant to change rates over the past few months, even with yields falling. I don't really see them lowering that much. But overall, it is highly likely that they will lower interest rates by 25 basis points. The Bank of Canada, on the other hand, some expect won't actually follow suit with the Federal Reserve, which is actually pretty surprising because in general, the Bank of Canada is pretty tied to the US, so a lot of things happen in sync. So it would be expected that Bank of Canada would lower the rates. We'll have to wait and see though. I expect that they might be forced to with just the change in rates in the US. Canada's GDP numbers for May have been released, with GDP growing 0.2% in May, as manufacturing is able to rebound from the previous month, as it expands 1.2%, in part due to the motor vehicle industry. Overall, 13 out of 20 sectors advanced in the month. The May GDP numbers may actually be tied to the market's expectation that the Canadian bank won't lower interest rates, as an increase in manufacturing as well as decent GDP numbers may give the Bank of Canada some room to leave interest rates at the position they're at. In company news, Apple released their earnings with a beat in revenue and earnings expectations. Revenue was 53.8 billion versus expected of 53.4, and earnings per share of 218 versus 210. Now, what's interesting about this is that their beat doesn't come from their iPhone sales and service revenue, as those are generally their highest portions of revenue. What it actually comes from is their other sections, so stuff like Macs, iPads, and accessories. So this is really good news for Apple, as the iPhones are declining in sales and they haven't been able to keep upgrading phones in the way they have been in recent years, and the desire by consumers of keep buying new phones isn't as high as it used to. Smartphones, everyone's got one, as well as getting a new one isn't as enticing as it used to be because the advancement in new phones isn't as high. So that they're able to make up for this in other sectors is a good look for Apple, and that they might be able to hold strong in the future. Another company that released their earnings is Spotify. They beat revenue, but they added fewer subscribers than expected, and they had a miss on earnings. So for revenue is up, they've reached a total of 1.6 billion in the quarter, and they've even had strong subscriber growth of 30% from a year earlier to 108 million, but analysts expected that it would be at 108.5 million. So it is down after hours of 2.2%. So what is kind of interesting though is that even though with their subscriber growth and their increase in revenue, they're still losing money. They've lost a total of 76 million euros. That's 0.42 euros per share, but that is better than previously of 394 million euros or 2.2 euros per share a year earlier. Although analysts were expecting only a loss of 0.32 euros, it makes me wonder if they'll ever be able to get to that profitable stage. I'm assuming they will, but it's hard to say when they will and if they will be able to hold their market share by the time they start making money, because they are facing stiff competition from Apple, which is behind Spotify in subscribers, but they do have 60 million subscribers as of June. In other news, Beyond Meat costs a fortune to short after raising 680% since its IPO, and its 14% stock fall just the past day over the recent earnings. A lot of people are wanting to short it, it looks like, with not very many people wanting to lend stock for the shorts. So they have a pretty high borrowing cost, with the last transaction going off at 197%. Put that in perspective, it's more than double the second most expensive one. This isn't too surprising to me, considering how highly priced Beyond Meat is. I don't really expect them to be able to satisfy that valuation, especially with how well their stock has been performing. A lot of companies are going to want in on that action. It's going to be a growing industry, so we'll have to see if they can take over the industry or they'll be squeezed out and just be a smaller player or even a decent sized player. But with the valuation they're at, they're going to need to be higher than a decent sized player.